At Metropol TV across all your social media platforms. My name is Simbalaja Charles Kiange. Thank you very much for being a part and parcel of our broadcast this morning. We have a jam-packed session for you. Let me take time and introduce the gentlemen who are joining us at this morning. You do know their faces. We're joined by Odhiambo Ramogi. Good morning, sir. How are you doing?
Good morning, Simba. I'm great, thank you.
Everything is okay from my end as well. I can't complain. We're counting down to the national election, 364 days. Are you counting down or not?
I'm really counting down as well.
All right, we're also joined by Chacha this morning. Chacha, good morning, sir. How are you doing?
Good morning, Simba. I'm doing wonderfully well.
Fantastic. Happy to have you around. Let's introduce the stories that we have this morning. Now, the operator of the standard railway gauge, commonly known as SGR, now wants billions of shillings in unpaid bills before handing over them fully to the Kenya Railway Corporation. Parliament revealed last year that Kenya had yet to pay 38 billion shillings to Africa Star Railway Corporation Company Limited, going by Afristar. The Chinese company contracted to run the train services, which has now included listed clearing of its debts as a condition before fully transferring operations of SGR to Kenya in May next year. In a story printed on the Business Daily, KRC Chairman Omudo Awita told the reporters that the negotiations between KRC and Afristar commenced in the year 2019 and that KRC would take over after the meeting of some conditions, including clearing of any outstanding payments. This will now be part of the 420 billion shillings that Kenya borrowed to build the modern line from Mombasa to Nairobi and for the purchase of engines and couches. Before we cross over to Odhiambo Ramogi this morning, let's look at where we are in terms of those earnings for SGR in revenue trend, and this is exactly what we've seen all the way to where we are right now, is that the freight services have been bringing it in a bit more than the passenger revenue, despite the challenges the freight services have been facing in the country. What we do know is that we are not cutting even as Afristar comes in to ask for that 38 billion shillings, meaning that we do not have the money or the revenue from SGR to settle that bill that we owe Afristar. Odhiambo Ramogi, let me intro this conversation with you this morning. It is 38 billion from 2017 to 2020. That's how we do know of it. And they're saying, well, give us our money before we transfer the running of SGR to the Kenya Railways Corporation, the corporation in the first place that should have run SGR.
It's an interesting turn of events. Two things stand out, Simba. One is that you have unsuccessfully run SGR.
Yes.
Have failed in delivering value to the person who gave you SGR to run. You have registered losses, and you're even unable to, break even your operations versus your costs.
Yes.
And then when it is time that you are told, okay, you have failed to do this job, you need to leave, you ask to be paid for the bills that you incurred, while it was in fact a business which you took the risks, the revenue risks, the profit risks, knowing very well that there is a possibility of making money or not making money. And so I think it's very dishonest on the part of Africa Star, and it's quite telling of the quality of people we get to do the work. But before that, long before this conversation, there is the question of, is the SGR sustainable?
Yes.
This thing cannot even pay its bills, leave alone its the debt that was used to construct it.
Yes.
So that then just tells you how poorly we have done as a nation in terms of embarking on projects that are unsustainable, unable to meet costs, and of course now forcing nation to use so that then you can pay back the loan.
Somebody's going to ask you, the Amber Ramogi, before I cross over to Chacha this morning, is it dishonest on the part of Africa, as they put it? Because then this looks like what was part of the agreement from the Kenyan side. Because had we foreseen this, then we would have said, well, part of that condition is that we have to run it by our own corporation. That's the Kenya Railway Corporation.
Certainly. Start to run SGR of SGR. These two questions are not being answered by KRC. They are just telling us, you know what, we owe this guys 38 billion and it's taxpayers' money.
Yes.
But on the other, have failed in managing the SGR. You have delivered losses year after year after year. You have not done anything to mitigate on these losses. And here we are, you still want to be paid fee for services of failure. Come on. I think we can do better than that.
Is it, let me cross over to Chacha, because with the Amber Ramogi, I'm not done with you on that as well. Chacha, the critics of SGR have said, do not just look at the SGR, look at what SGR is going to enable the economy achieve, and then sort of the economic importance of SGR as opposed to the SGR itself. Is that a better argument in understanding exactly where we are with SGR?
Thank you, Simba, for that question. First, I would want to say that the standard gauge railway
Yes.
has been the largest infrastructural development project since independence.
Yes.
And this project has, let's say, revolutionized and greatly changed the transport system in the country. So before we look at maybe the shortcomings, the economic impact of SGR,
Yes.
we appreciate, for example, first, the positive impact of the SGR on the Kenyan economy, right? As SGR has created number of job opportunities to many Kenyans. It has contributed either directly or indirectly to the creation of job opportunities.
Yes.
And as a result, it has led to increased, let's say, urban development, the increase in industrialization in certain sectors, call it agriculture, tourism, and so on. However,
Yes.
as it has been said, the SGR consumed a lot of money in terms of construction, and the greatest economic challenge we face here is arising from the inflated cost of SGR, which, as you have said, actually, we went to the tune of borrowing shillings. And now to break even has been the challenge because, as has already been noted, Afristar, the company that is running the SGR operation, demand 38 billion shillings.
Yes.
And you will find in the first 2 years, they were able only to collect 10.1 billion shillings against the expected target of 18 billion shillings. That means now, in terms of operational costs, Africa has been unable to meet the target. And this is now lumped upon the government. Before now, the Africa leaves or hands that to Kenya Radio Corporation. They are demanding the payment in debt. Maybe we can understand the challenge they're facing, in as much as we may say, oh, well, they may have been dishonest. But look at the operational cost and so on. We do expect that Africa has been honest. Let us actually, at the best view, let's hope that they have been honest, and that cost of running the SGR as we know have been rather high.
Yes.
Again, cost in car in construct, putting the SGR in place. What it requires now, maybe request for a comprehensive forensic audit of the financial book of Africa to find out indeed, have they really failed to meet the rent collection from the what has really been the problem?
Yes.
Before the Kenyan government can cover. By and large, SGR has been a tight project. Thank you.
Right, let me just get back on you on that as well. There's a point you said. Well, it looks as if Africa is not being honest. But here's the question somebody is going to ask you on that area as well. I mean, when you give me the mandate to run the services of a certain company, I do not think that if I fail to achieve that target, you turn around and tell me, well, we are not going to pay you this. You still got to pay. That's part of the agreement before I move out. Because the only thing that was supposed to expire is their tenure, which we do know expires next year.
All right. First of all, I was a bit surprised by my brother Chacha with some of the comments that he gave.
I knew you were going to get back on that as well.
I was wondering, is he living in the same country I am?
Chacha, you're going to have time to react to that.
Yeah.
Yes. Go on with the umbrella.
Yeah. Well, first of all, yes, I agree that SGR is one of the biggest projects that we've had since independence.
Yes.
I also agree that it's a beautiful thing that we've constructed. I disagree that there are positive impacts except sentimental. I have been on the SGR. It's fun to know that, well, finally I get to ride a train in Kenya which doesn't make noise, you know, the diesel engine. So it's interesting. I mean, it gives you sentimental feelings of, well, we are getting there. But
yes.
In actual fact, no, we have not had positive economic impacts of the SGR.
Yes.
Mombasa County has been losing over 100 billion shillings worth of business that is associated with freight, courtesy of the SGR. No, let me rephrase that. Courtesy of the forced movement of cargo
yes.
that has been established by the Minister for Transport, making Mombasa County to be a shell of what it used to be. Several jobs have been lost. Livelihoods have been lost. The economy of Mombasa has been dwindling. This is on record. It's on record by the civil society. It's on record by the Dock Workers Union. It's on record by everyone. So when you say that it has created job opportunities, I'm wondering which jobs. For every job opportunity that the SGR has created, it has lost 1,000 more.
Yes.
Because the truck drivers are at home, the clearing and forwarding agents are at home, the warehousing agents are at home. Everyone is really at home, courtesy of the SGR. On the other hand, you're saying that it is creating urban development. Really? Sosua is not even where it should be, and it's in the middle of nowhere, and that's where the SGR is landing. But let's go back to Mombasa, Nairobi, which is actually operational.
Yes.
And I'll tell you that the truck business, the truck drivers have been making small towns to grow on this road between Nairobi and Mombasa for years. Now that we have the SGR, which we are being forced to use by the government when we import, Now that we have the SGR, these towns are actually struggling to survive. And it's not just a case of Mombasa anymore. It's a case of Mombasa and all the towns that are in between here, the likes of Emali and Salama, they are all struggling. And so when you say there is urban development, you mean the development of Nairobi, or you mean the small urban centers that are supposed to be developed? Industrialization, I don't know if you were here in 2018 when the first year of implementation of SGR,
yes.
The small business owners went to the streets and were telling the president, Nigute, because it's become more expensive to import products from China. It has become more expensive even for Kenya Association of Manufacturers to bring in raw materials. And so that what was supposed to be a catalyst for development has become a hindrance for development for manufacturing.
Yes.
And so when you say then that there is industrialization, I'm wondering what industrialization? Because even the machines that they brought us, the diesel engines that they brought us are, Stone Age machines. I was expecting that with the kind of investment we had, we would be having a double line with electricity so that I travel peacefully without the danger of getting fumes. But what we have right now are old machines that are no longer usable in parts of the world. That's not industrialization. That's just backwardness being expressed in form of industrialization. And so, no, I do not agree that we have had positive impacts from SGR. I think it was not timely.
Yes.
I think we should have renovated the old railway line, meter gauge railway line, and have made the most of it. Would have spent at most 10% of what we spent, and would have saved jobs and would have made our economy much better. Yes, I agree that there needs to be audit. Now, I don't know if Simba, I have spent all my minutes, or I can now comment on the issue of honesty of Afrista.
Yeah, just 1 minute now before we cross over to Chacha, so we go to the next issue.
Yeah, the point is, Afrista is not an employee. You see, when you employ me, you give me the necessary facilities, and you give me the necessary authority, and you tell me, run this thing.
Yes.
If it fails, I am not a capital owner, so I am not a risk taker in that venture. If it fails, you still need to pay me my salary, you still need to pay me my dues, and you still need to pay for my insurance and pension.
Yes.
But Afrista is a business. It's a capitalist going concern, which means it takes part of the risks when it tells the government, let us run this and get a percentage of the revenue, which means it has taken the risk with the government. Mm-hmm. So now when the government has failed and Afrista has failed to make this thing turn around, you do not turn around and tell the government, but wait a minute, pay me for the costs incurred. It was implied that if you're taking the risks, it means you will pay for your own costs. And so that's why I'm thinking, no, this is not being honest, because you took the risk with us and you wanted the profits, they didn't come, which means then you must also have a share of the losses. Don't ask us to pay for losses incurred. You took the risk with us.
Pretty much. Chacha, in just 1 minute before we cross over to the next issue, Odhiambo Wamogi doesn't seem to agree with you.
Yeah, thank you. My brother William Odhiambo does not need to agree with me.
Yes.
But as a matter of fact, I needed to state from the outset that SGR has both the positive impact on the economy, despite the economic side effects.
Yes.
By saying the post, when we say that SGR has created job opportunity, we are talking of the people that have been employed there to work. We are talking of indirectly those maybe who are offering catering services, entertainment, and so on. In as much as one would say, well, jobs have been lost depending on maybe those who relied on the transport industry, the trucks, the lorries. Well, many more also have been created.
Yes.
It will be rather narrowistic to say that SGR has only negative impact. We also saying that SGR has reduced the cost of doing business and even the cost of maintaining the roads. When we are saying that now it takes a shorter time to travel via SGR to Mombasa, we are saying now instead of incurring a lot, even in terms of transporting goods from Mombasa to Nairobi and so on, it takes a shorter time. That means the cost of now transportation has greatly reduced. And in fact, it has also saved the government some money in terms of maintenance, in terms of relying only on road transport. When you say it has led to growth of industrialization, we are talking of now the growth of the construction industry. We are talking of related industries, for example, agriculture. We are talking of tourism. We are talking of mining that are associated with the SGR services. Well, one may argue that maybe some towns traditionally that grew as a sort of road transport, like a town like Kemal, Mutitandei, their business have gone down, but solely, we also have road transport, although now the number of lorries, the number of buses have decreased. Other towns still have grown because the SGR has led to the creation of certain terminal points. Yeah. So in that case, we look at also the positive. What I would also say, the major undoing of this SGR, as we said, is that now it has increased the debt burden to our country. Remember, by the time the loan we borrowed of 420 billion matures, our country will be close to 1 trillion shillings. Add that to the total international debt that Kenya has. So the debt burden has increased. Perhaps that is where we face the greatest economic challenge in terms how do we repay the loans. In terms of management, well, even if Kenya Railway Corporation were to manage it, we would still have expected more problems. Look at the way we manage our parastatals. Do we see a high degree of competency, a high degree of integrity? Maybe the same will have happened. Perhaps maybe it will have collapsed. The same problem we are talking of the meter gauge radio. We have failed to manage that. The problem here are self-induced. How could we procure the resources or the materials for construction at higher prices?
Yes.
That is our problem. It is not China or Africa that caused the problem. It is our corruption. It's our greed that is the greatest challenge. Thank you, Simba.
All right, gentlemen, let's cross over to the next issue this morning, where now the Central Bank of Kenya will have powers to dictate lending rates for digital lenders in the country after the Parliamentary Committee on Finance and National Planning approved the Central Bank Amendment Bill 2021 and added a clause that gives the CBK powers to price interest rates for digital loans. Now, the bill will now see to the curbing of the steep digital lending rates and a product approval from the CBK in the industry. Kevin Mutiso, chairman of the Digital Lenders Association of Kenya, DLAC, reacting to the news, said that this was not going to give CBK necessarily powers to set the lending rate, but rather provide parameters within which digital credit providers shall set the cost of credit, which is why we're looking at the cost of credit in the country this morning. Let's look at where we are in terms of the annual average lending rates for the banks into the country, and you can see pretty much all the way from 2015 to 2021 we're talking about an annualized lending rate of around 12%. But we do know that some digital lenders in the country have been going all the way, even upwards of 300% annualized interest rates in the country. Now, Odhiambo Ramogi, the case for interest rates was a bit silent up until just the other day when that clause was inserted. Is this the most important sort of regulation that you can talk about then in that digital lending in the CBK, amendment bill that is supposed to curb or discipline digital lenders in the country? And do you agree with Mutiso when he says, well, the CBK doesn't want to tell us what we're going to sort of cost our loans? They're pointing the direction to which they want those interest rates to go.
Well, on this one, I think if I was in government, I would have occasioned, cajoled and asked members of parliament to include that clause there.
Yes.
I feel serves the of government, and perhaps on this government and the people outside. One, the government needs revenue, and these digital lenders are making money, so it's very easy to just get money from them. In this economy, when no one else is making money, anyone who is making money must be able to come and generate revenue.
Yes.
They are part of those. But on the other hand, also, these guys can be greedy, buana. Some of these lending apps, 300%.
Annualized.
And some of it you pay 300% within a month or even within 2 months. And so I think it's time that there is regulation around that, so that then we protect the Kenyan public. Many of the guys who borrow from these guys are young people, young tech-savvy university students, sometimes even high school students whose idea is to get SIM cards, 25-year-olds, first job, so the general population that they are targeting are young people that are not experienced with financial management and financial literacy. And you know that our education system has not supported financial literacy, so that people are learning how to manage their finances in their adult life, because they are not educated, they are not well prepared to manage their finances. And so you find that these guys are behaving like loan sharks and targeting this uneducated or ill-educated population with very expensive loans. And I think that needs to be regulated. Is this most important of regulation in terms of digital lending? I think so. There is need for regulation. I am never in support of interest rate capping, but I love what the government did. They brought it in to just tell banks, we can always do this. And then now, by the time they withdrew, banks are now more careful in terms of how they lend.
Yes.
I think they need to do the same with the digital platforms.
Pretty much. All right, Chacha, we have 5 minutes for this conversation before we take a short break. Let's talk about that financial inclusion. When you cap the interest rates that are charged by these digital lenders in the country, are you sort of also stifling innovation? Because you can only get innovation if you have the ability to sort of get into the willing buyer, willing seller situation.
Yeah, thank you, Simba. I think one of the critical questions that we need to ask ourselves is that how did the digital money lenders come into place?
Yes.
How did they come into existence? Was there a gap? Was there a lacuna that necessitated the creation, the emergence of digital lenders?
Yes.
Well, when we look at the scenario surrounding the emergence of digital lenders, you find that they exploited a gap. There was a gap in terms of regulations governing borrowing, governing debts. So digital money lenders, these are just like, initially we used to have the chamas, even the villages, charging over 100%. And the digital money lenders are following the queue. Actually, they get it from the chamas. And now that's why they are charging exorbitant interest. The thing that comes to the service here is the lack of policy framework, regulation, laws to manage digital lenders. I think Parliament is realizing rather late that these lenders are making exorbitant profits.
Yes.
And they are unregulated. And by now passing what we call the Central Bank Amendment B 2021, that one will provide parameters upon which these digital lenders will operate. For example, they will have to introduce maybe interest rates, cap the interest rates as a certain percentage. So it is not so abnormal. So by doing that, the government is not stifling innovation. It is controlling the debt burden. Remember, in Kenya now, it is easier to borrow than to save. It is easier to borrow than to save. And the young Kenyans, as my brother has said, young Kenyans in schools, in colleges, in universities,
yes,
are fallen in the debt trap. And there is a need to regulate this because the lenders here are unscrupulous. They don't matter what these people borrow them for. And remember, Metropol, Credit Reference Bureau, has listed 14 million Kenyans as defaulters. And many of them have defaulted through taking digital money debts. And we need to control that debt burden. Otherwise, as a country, they are not helping us grow our economy. They are in fact plunging us into a debt burden. Already we have the national debt, now we have individual debts. So we are in a vicious circle, my brother, and this has to be controlled by our means. Thank you.
All right, Odhiambo Ramogi, we're going to go on a short break, but once we come back, let's address that question now, because if you are going to be formalized, then the CBK is going to treat you as a bank in the sense of any product that you think of about, they have to actually go through it and give you consent to push it back into the economy. But then, when you look at that, and then also you have to give them the sources of your money. So any product, any sort of lending, any interest rate has to go through the CBK. And now, digital lenders in the country have 6 months, should that law be passed, should that be passed into law, to conform. That specific area for financial inclusion, are we going to affect it? And indeed, can we then address it by passing our products through the CBK? How do these products look like? It's a financial product. How is a digital lender going to come up with a financial product as opposed to saying, well, I have money, I want to put it into the economy? It looks as if the CBK doesn't want that. Once we come back on Metropol TV, you're watching Business AM. My name is Simba Elijah Charles here again.